mention where you are joining from? It's always exciting to see where our delegates are joining us. Very topical discussion this afternoon. Hello, everyone. Feel free to use the chat. Welcome, Cape Town. Jeffries. I hope it's nice and warm in Jeffries. Hi, Roy from East London. I'll be visiting in a week's time. Can't wait for it. Gauteng also in the house. Zelda and Annelies also from PE. Welcome, everyone. Felisa in Gauteng. Hello. We've got Northwest in the house. Potchefstroom. Got people from Adrian van der Venter from Durbanville, also Bryanston. And we've gone international. Welcome, Nigeria. Shania Obasi, I hope that I pronounced your name correctly. Welcome. Hillcrest, hi. Sabile. I'm going to give a few minutes. Mpumalanga, Admiral, Stephanie, welcome to the webinar. Marlon in Pretoria, good afternoon. Roma, welcome all the way from KZN. Technology is amazing. We can all be around this virtual room, coming from all avenues, corners of Africa continent. Hi, Anita and Secunda. Phelan's fairly close to where our office are based. Hello, Phelan's. Hi, Lynn from Parkwood, Johannesburg. ECU Esther, welcome from Bloemfontein. Charlene from Cape Town. So we're filling up nicely. I just want to give a few seconds before we start off. Hi, Andre Maria from Hopefield. Maureen from Durban. Also welcome to this afternoon session. Liam in Rosebank. Hello. Brenda Jacobs from Johannesburg. Always welcome. Dimitri from Bedfordview. Good afternoon. Thanks for making time, everyone, to join us. A very topical discussion. Hi, Natalie on the East Rand in Gauteng. Lesego. Good afternoon, Lesego from Roll Properties. I'm very cautious of our time that we have, and from our previous experiences in this series of webinars, we've had some great interaction. So I'm going to allow for another minute or so, and then we can start off with the introductions. Hi, Amanda from Springbok in the Northern Cape. Welcome. Natalie from Stellenbosch. Fatima from Parkview. Everyone, welcome. I think I'm going to start off. Good afternoon, everyone. Welcome to our webinar, a very special one indeed for the panel that have been hosting this series of big webinars, as this would have been our 1-year anniversary of the series of big webinars. So I would like to thank you to the panel of speakers and hosts that have been on this journey with us as we share some industry knowledge, some subject matter experts as well, and trying to navigate through this compliance maze with regards to our risk management and compliance programs. Today, we're going to talk about from compliance to confidence, and more specifically, whether our risk management and compliance programs are relevant in 2025 and beyond. South Africa has made significant progress in addressing the action items required to exit the FATF grey listing. As of June 2025, we have substantially completed the 22 items that was recommended by the task force. FATF has determined that South Africa warrants an on-site assessment to verify if the implementation of the anti-money laundering and combating of terrorist financing reforms has been put in place. So what does this entails? It entails that we need to show that the steps and the reforms that we've put in place is sustainable and that the necessary commitment is applied and remains in place. This also involves demonstrating that there is an increase in the investigation and prosecution of serious and complex anti-money laundering and terrorist financing activities. Today, we will explore the critical updates and strategies necessary for enhancing your risk management and compliance program to meet the evolving regulatory landscape. I'm joined today by Cedric from Masthead, Cedric Afindi, all very well versed and has been part of our journey since the first inception last year around the same time. Cedric, welcome, and over to you.
Thank you, Melinda. Great being part of today's session as always. And yeah, especially for the last year. And as you've mentioned, navigating through this very complex, ever-changing piece of legislation. So thank you for that. I'm sure we will be helping and assisting accountable institutions in the future because we are not done yet. So thank you very much for that. Welcome, everybody. Thank you so much for attending today's session, taking time out to discuss this very relevant topic. It's a topic that, as I've mentioned in previous sessions, will not be going away soon. We will constantly have to look at it, review, change, and adapt. And I think that is where the secret will lie with embedding successful FICA legislation, is that it's ever evolving, and that the way we look at our organizations and we look at our business and we manage our risk, and most importantly, we make sure that our organizations stay safe, because that's what it's about. This piece of legislation is created so that our organizations can be safe from people that want to use it for unlawful activities. So we're going to have a little bit of a look at what happened in the last couple of days. Melinda actually mentioned it now, the media release from the National Treasury on the 13th of June. I'll touch on that very, very quickly. Actually, Melinda did my first slide basically for me. And then we're going to have a look at what's next, what's coming. What is it that I need to prepare myself for? Where are we? How should I approach this? And then we're going to focus on the RMCP again, because that is the center point. That is where we get measured on as an accountable institution. How we conduct ourselves day to day in our organizations, and how well documented is my RMCP. And I'm going to show you some loopholes of where people sometimes make mistakes when and not on purpose, but what they actually think a RMCP is and what an RMCP actually is supposed to be at the end of the day. So there we see the media statement. As Melinda mentioned, we addressed all the concerns that the Financial Action Task Force had. And because of that, we can now get an assessment. And if all goes well in our on-site assessment, then October might bring good news for South Africa, that we will be removed from the grey list, which I'm sure as a nation and as a country, we are hoping for, because a lot of people has worked very hard, and it was a collaboration of a lot of people and even institutions like LexisNexis creating platforms like this so that people can be educated on what it is that they need to do. So we're holding thumbs. But now here's the thing. Getting off the list is one thing. It's very much like you setting yourself a goal to achieve something, whatever that goal might be, whether it's personal, whether it's in your job, whether it's changing your physical fitness, whatever the case might be. And on that journey, you make significant progress, and you know, you feel great, and then you get to a point where you've achieved, but now you need to maintain. And that sometimes is where the difficulty lies, because with maintaining does come change, as and when required. We unfortunately can't go and sit back now and say, right, we achieved it, we're off the list, and we can now with ease move forward. That unfortunately is not the case. We will have to show the Financial Action Task Force that we as a country are able to sustain what it is that we have done and what it is that we have implemented. And we will keep on growing, moving forward. So with that, I want to share this news with you. Even though we are going to be visited by them and get a decision by hopefully October, as they've instructed, already the regulator and supervisory bodies are preparing for the Financial Action Task Force next mutual evaluation report of South Africa 2026-2027. And that's already underway. So the regulator is not just looking at October or now, they're already looking at 2026, 2027. Part of the mutual evaluation report is the Financial Action Task Force, of course, reaching out to these supervisory bodies and the regulator, asking them how many audits and in how many different types of industries have you done the necessary auditing, coaching, teaching, very comprehensive assessment that gets done. Okay. So if we look, I beg your pardon, to our risk management compliance program, we need to make sure that it's up to date all the time, that it's relevant, that it speaks to our business, and that it's detailed enough for somebody that doesn't work within your organization to actually understand what happens in your organization. And most importantly, everybody in your organization. What is the company's or what is the organization's approach when it comes to money laundering? Now, what is, however, a little bit concerning, even if we do move off the financial, the grey list, is that if we look at the terrorism financing national risk assessment, it was released last year in June 2024. Unfortunately, the report highlighted that there's growing likelihood that funds or assets could be raised in or moved through South Africa to support terrorism. It does, however, say, as you can see in the next point, it's not referring that Africa or South Africa is the primary target for terrorist attacks. It is increasingly implicated in that funding activities for abroad. So when you hear these things, and of course the Financial Action Task Force is aware of this, that we have done what we were supposed to, but this is still a growing concern. Now we're not just focusing on people using our organizations in South Africa unlawfully, but that people outside is looking to use organizations to do horrible things. So the FIC is urging accountable institutions to ensure that their risk management and compliance program, RMCPs, are robust and effectively implemented. A RMCP, ladies and gentlemen, is not just a document. It's definitely not a template, I beg of you. It is detailed processes of how you are protecting your organization against people that want to use it for unlawful activities. Yes, regulation requires us to have certain information documented within that, in our risk management compliance program, which we will touch on a little bit later. But it's a very, very important document. And it's something that needs to be reviewed on at least an annual basis, or as and when legislation changes, or as and when you add services or products to your organization. Something that needs to stay top of mind all the time when we do these things. So let's look at most of the non-compliance relating to the risk management compliance program, the actual document. Now, this is information that we have gathered, having meetings, sitting in sessions with supervisory bodies, the regulator, attending conferences, and doing a lot of audits as well. As an organization, Marsted, we sit in a lot of FIC audits, whether it's, as I say, from the FIC regulator itself or supervisory bodies. And here are some of the big concerns still when it comes to the risk management compliance program. Number one, accountable institutions not conducting a thorough business risk assessment and it's poorly documented in the risk management compliance program. I can have a 3-hour session just on a business risk assessment. Unfortunately, we don't have the time. We have very limited time. But most of it is seen as generic. We get into a position where it's generic because somebody gave me an RMCP or somebody gave me a template, and I didn't apply my mind in what is my risk when it comes to my organization and my business. Okay. Remember that risk assessments and RMCPs have been mandatory since 2017 already. So as you update your RMCP, hopefully you had one in 2017, you reviewed it. And as and when changes happened, as you know, there's been a lot of changes in the last 2 to 3 years to the risk management compliance program. You are asked to keep your old version and just create a new version to show the regulator that you complied with this piece of legislation from the beginning. That's also very important. So don't get rid of it. As you improve, you keep the old versions as well. Okay. The risk management compliance programs are not up to date. And there's a big disconnect between what is documented and what's actually happening in the business, because that's how you will be tested. For an example, record keeping. If you got a template somewhere or somebody shared one with you, most of you would have something like, I have to identify beneficial ownerships. Yes, we all know that. Legislation tells us to do that. I have to identify my clients and screen my clients. I have to train my staff. I have to keep records. That's not enough. You need to be able to detail in your RMCP how I do these things. What is the actual process when I screen? So, for an example, when I enter into a relationship, whether it's a business relationship or a single transaction, screening will take place the following way. I will use LexisNexis KYC. After that has been taken place, this will then happen, this will then happen, this will then happen, this will then happen. And It's not generic for all companies, because screening might be done by a specific individual, might be done by vast amounts of individuals that deal with clients. And that process needs to be documented, detailed, because what will happen in an audit is they'll open up your RMCP, they'll look at the process, and then they'll measure it to the actual process that is happening on your day-to-day activities. We cannot have documents where we just copy and paste. It needs to be unique, and it sometimes can be a very daunting task. And there's nothing wrong with asking help, specifically if you're looking at a business risk assessment, not just your normal risk assessment relating to your clients, but specifically a business risk assessment that forms part of your RMCP. Customer due diligence and failing to comply a risk-based approach. As an accountable institution, you are required to risk rate your clients, low, medium, high. Linked to that is a due diligence process. You can't ask the same information for a low-risk client and you ask for a high-risk client. Defeats the purpose. The higher the risk, the more due diligence one should do. Know who you are doing business with. And poor screening of clients is the other one. Or screening after the fact. Or not using reliable sources to screen. Because please note, the responsibility when screening a client does not lie with the regulator, even if you use their website. It's still up to you. The responsibility lies with you to do a thorough investigation when it comes to screening, specifically if a screening alerts you to something which might hinder the relationship or put you in a difficult position. Based on that, my question to you is, in February, Guidance Note 7A was released. And we needed to do, and of course we had Directive 3A, PCC 50A, Bhaktatara Court Order, which we discussed, I don't think in our last session, but in our previous session. And then of course, updates from recent related inspections. You were required to go and update your risk management compliance program. Again, and I've just taken out some of the aspects within Guidance Note 7A. Unfortunately, we don't have the time to work through it fully and completely. You'll find it on the FICA website, Guidance Note 7A, if you need more guidance and assistance. But some of the things that have changed, so you need to adapt your RMCP accordingly to your processes. Approval of the RMCP cannot be delegated. Board of Directors take responsibility for the implementation of the RMCP. They're looking for more detailed information required of an accountable institution's compliance function. So how does your compliance function look within your organization? Do you have external help where people are assisting you with monitoring? It's not a requirement. I'm giving you just some ideas. So they want you to document what is your compliance function? How does it work? How do you stay abreast of things? Compliance function section to include a description regarding seniority and experience. So who's the money laundering officer? Why did you choose him to be the money laundering officer? What made him or her stand out as an individual to be identified to perform this very important task? Group-wide compliance, if that's applicable to your organization. If not, then it's not. But if it is, how are you going to go about the group-wide compliance, the implementation of this piece of legislation within all aspects of the group itself? Directive 2, 2024 on sharing of logging details. You need to update that. Information pertaining to when there are changes to the entity information regarding shareholders, FICA, COs, all of those things. If there's a change, how am I going to do it? What does legislation say? How should I go about doing it? And you'll find that in Guidance Note 7A. Process on how a new FIC CO can obtain user credentials on the GoAML. there's been an update on how to do that. That needs to form part of the RMCP. Then the business risk assessment. Those of you that have updated your RMCP recently before Guidance Note 7A would have introduced something called a business risk assessment and a sectoral risk assessment, and that was based on the national risk assessment that was provided to us. Now they are asking you in Guidance Note 7A to go and revisit your business risk assessment and incorporate inherent and residual risk when it comes to your business risk assessment. Again, you need to go and have a look at your organization, where you have been, where you are now, specifically if you're looking at inherent and residual risk. And then also just on suspicious and unusual activities, when to submit a SAR, when to submit a TFAR, when to submit an STR, and when to submit TFTR. Okay. So again, if you haven't after Feb, you need to go and re-look at the RMCP and update it accordingly as well, to make provision for Guidance Note 7A. Very, very important to do that. These changes will keep on happening. It's not going to stop once we get off the actual grey list. Okay, so let's just reflect a little bit and look at what it is that is important to make sure that we don't just tick the risk management compliance program, but we tick all the boxes. Am I registered as an accountable institution? More importantly, am I registered correctly? Do I need to dual register? Okay. Secondly, training and screening of employees. And it's not just training on the Act itself, but it's also training our staff on our risk management compliance program, making them aware of how we as an organization have incorporated FIC and how we go about our day-to-day activities and what is documented in our RMCP. Governance, how does our governance work around legislation, specifically focusing on FIC? Making sure that I have a personalized, updated risk management compliance program that speaks to my organization. Make sure my customer due diligence is aligned with my risk rating and is documented in the RMCP. Record keeping. How does my record keeping work? How does it look? Am I using a third party? If I am using third party record keeping, I need to inform the FIC. And then most importantly, reporting. How does reporting lines work within my organization, and when and how to report? All staff within an organization needs to know when reporting is required, specifically if it comes to the 3 reporting requirements, focusing on cash, suspicious, and terrorist financing. And now some additional when to submit certain things. Everybody needs to know the days, how many days, because you have certain individuals that report. And if you have 15 days to report, don't wait until day 14 to inform the FIC compliance officer or money laundering officer of this. That individual needs enough time to submit the report so that he can provide the FIC with enough information when it comes to anything suspicious. Okay? People need to know how that works. Okay? The risk-based approach. The reason why we have a risk-based approach and why that's fundamental to the success of the implementation of FIC is that in our organization, we need to be able to identify, assess, monitor, mitigate, and then manage. So what does that mean? Once I take on a client and I assess the situation and whatever business relationship we're going to enter into, there needs to be monitoring that takes place. Needs to be more interaction with clients when it comes to who my clients are. Okay? I need to put in place certain mitigating factors from a risk perspective that somebody isn't using or might use or whatever. So if you haven't seen a client for 3 or 4 or 5 years, that client's circumstances have changed. You don't know if there's no regular check-ins. It depends on the nature of your business, of course. If your business is centered around business relationships, then it's very much applicable. If your business is related to single transactions and you need to know what that definition means, then for you it might be a little bit different. Hence the fact you can't use a generic template RMCP. It needs to speak to your organization. And then there needs to be ongoing management when it comes to risk, specifically focusing on terrorist finance, terrorist financing, proliferation financing, and then, of course, making sure that people don't use our organizations to launder money at the end of the day. Monitoring. Accountable institutions must have, and I want to emphasize this, ladies and gentlemen, accountable institutions must have sufficient systems and controls in place to manage and monitor risk identified and assessed. Whether that system is automated, which of course makes our lives a little bit easier, or if it's manual. But that system should be sufficient. Sufficient, specifically focusing on, of course, how you do things in your organization. Okay. If risks are higher, the range, degree, frequency, or intensity of preventive measures and controls conducted will be stronger. And that's where our due diligence process kicks in. Whether we do simplified due diligence or enhanced due diligence, do I need to scrutinize information more relating to this individual that I'm now going to enter into a business relationship with, or a single transaction? Okay. All clients and business relationships are different, and the way they are monitored should reflect this. I will deal with low risk clients different to medium, different to high. And that needs to be documented, how you will deal with those individuals from a monitoring perspective. We did speak about this, but I just want to emphasize, because we forget this. Unfortunately, a lot of accountable institutions, and I'm not saying on purpose are avoiding it, but we forget it. Section 43 of the FICA Act states that employees need to be provided with ongoing training regarding FICA and the RMCP. Please do not forget that. You need to give training. So when we talk about training of the RMCP, we talk about something that can be evidenced. What did you use to give the training? Yes, like the RMCP. And how did you assess if your employees understands the RMCP, which is also important. It's not prescriptive on how it should be done, but it is required of accountable institutions to do it, to give training and to assess the level of understanding. Okay. So the purpose, of course, very simple: to ensure that every employer understands the legislation, to ensure every employee knows what is expected of them to be compliant. If an employee, very important, if an employee has not been trained, they're not allowed to deal with clients. To ensure every employee is alert to the risk of money laundering, terrorist financing, and proliferation financing. And then to ensure every employee can identify suspicious or unusual activities. Employees needs to be guided in some way or form. What is it that you need to look out for? What possibly might be suspicious around a specific individual or an organization? What should prompt you to do further investigations, or at least speak to your FIC compliance officer or money laundering officer, however you call it in your organization? The Risk Management and Compliance Program, Section 42 of the FICA Act explains the duty to develop, document, maintain, and implement an RMCP. It is a legislative requirement. You have to have it in place, and it needs to be personalized, and it needs to be up to date. It must have all policy documents and must detail all processes, systems, and controls used for customer due diligence, record keeping, reporting, and how the risk-based approach is used in all of these measures. Hence the fact it is not a 10, 15, 20, 30-page document. It can't be. there is, depending on the nature of your organization. But out of the years doing this and looking at what actually needs to go into this document, it is an intense piece of work that needs to go into making sure that a risk management compliance program is compliant. You must describe all the measures, processes, and controls in place to ensure a risk-based approach is followed with regards to identifying, assessing, monitoring, mitigating, and managing. An accountable institution, as I've mentioned before, will be measured if you get visited by the FIC or a supervisory body. So here's my document. Let's see how it's actually applied within the organization. And it will be measured against that. So yes, my RMCP might be compliant, but is it speaking, are we doing what the RMCP is saying? That test will also happen. And then employees may be interviewed regarding their understanding of the RMCP. I wish I could take away that word may. Sorry, I beg your pardon, because I can almost guarantee you that there will be some form of testing. Now, when we talk about interviewing, I'm not saying that it might be formal, it might not be formal. It might just be checking. So what they will do is to test and see if employees understand what the risk management compliance program is, how does the processes work, they have access to the RMCP, they've received training on the RMCP, they understand it. So it's not about what's on page 25, second paragraph. It's about testing to understand their knowledge of that document, that they've been trained on it, and that FICA is part of their day-to-day activities. Okay, they really like to test that and see if that'll work. Again, the FIC Act states that the board of directors or senior management of an accountable institution are now responsible for the compliance with the FIC Act and its risk management compliance program. Okay. Board of directors needs to make sure that that document speaks to the processes, is signed off, is implemented. And then, of course, depending on the size of the organization, what are the reporting lines to the board of directors of the actual implementation of the RMCP, the compliance function internally, and how is that documented in your RMCP? Okay. The duties of the FIC compliance officer, those of you that are present, that is a FIC compliance officer within your organization, this is just a refresher for you, because you have been elected by the board of directors to step into this role due to whatever it is they identified you, whether it's your experience, whatever the case might be. So as the FIC compliance officer, you need to make sure that the accountable institution is registered correctly. Okay. There must be an RMCP. You need to ensure that training happens at least on an annual basis. Depending on the complexity of the organization, it might be more. But training gets done. You must make sure maintaining and updating the RMCP. You must make sure that you have a process or systems in place that is robust when it comes to verifying clients, risk rating them, identifying source of funds. You are the one that submits the reports to the FIC. And of course, you are their contact person. They will liaise with you if there's any information they require from you as an accountable institution, or just in general, you are the key person there that they will reach out to. Just again, putting aside guidance note 7A, the RMCP should contain the following: description of the board of directors, senior management, and accountability. A description of the appointment of the person with adequate seniority, which of course refers to the FIC compliance officer. Appropriate training on money laundering, terrorist financing, proliferation financing. Appropriate provision of regular and timely information to the board of directors or senior management, appropriate documentation of the institution's risk management policies, risk profile, appropriate description of the decision-making processes regarding application on a, oh, sorry about that, slipped, about application on different categories when it comes to the customer due diligence process and other risk management measures, including escalations of decisions. Because as you know, if you deal with a low risk or medium risk client, individually, that might be different. If you deal with somebody that is high risk, it is required by the money laundering officer, FICA compliance officer, to actually sign off on that. Am I going to accept this client or not? Okay. Some people give one person the authority to do that. Some organizations, some actually have a risk committee where they sit around a table and they discuss that. Okay. Appropriate measures to ensure money laundering risk is taken into account in the day-to-day operations of the institution, including in relation to development, onboarding of clients, change of the institution's business profile, details of employee screening as per Directive 8. It must be appropriate in size and complexity of the accountable institution. Again, hence the fact it can't be generic. Each and every organization is unique in their own way. Specify if any elements outlined in Section 42 of the FICA Act does not apply. That's also very important, what some people sometimes misunderstand or forget. So if you look at legislation and you as an accountable institution have the authority to transfer funds to clients out of your own bank account, you have the authority to do so, and it's more than 19,999 Rand, and it's going to a individual in a foreign country. You have 3 days to report this to FIC. If you don't offer that services, you can't not have it in your RMCP. You need to make reference to that piece of legislation, and then you need to say, as an accountable institution, we do not do this. You can't just leave it out. Okay. So consider the nature and the extent of the accountable institution's internal systems and controls. And there's a variety of factors. For an example, the nature, the scale, the complexity, diversity in operations, including geographical diversity, client, product, service profile, your distribution channels, the volume, the sizes of the transaction, the degree of risk associated with each area of its operation. And then, of course, where accountable institutions operate in groups of companies must be implemented group-wide. Very important. If need be, if there's an organization within the group that offers a different service, so not everybody offers the same service, but it's part of a group and it's an accountable institution, then of course that needs to be tailored to that specific organization within the group. Must meet anti-money laundering, counter-terrorist financing, and counter-proliferation financing. All those requirements must be communicated widely throughout the institution to increase the effectiveness of the implementation, must be reviewed at regular intervals, as I say, at least annually, or as and when you change or add services. And then, of course, changes in legislation as well, and be approved by directors and senior management of the accountable institutions. As you can see, there's a lot of work and effort that needs to go into this document in order to make it robust, not just for legislative purposes, but that's very important, but to protect your organization at the end of the day. Don't ever think that these things can't happen to me. I've heard too many stories where people have told me, I never thought this would happen, and it actually happened. Please don't think it's not that our organization is at all times safe. Do the necessary and put the necessary in place to ensure that the organization is safe at the end of the day. Make sure the RMCP is documented, speaks to your processes. do the necessary, ask for assistance, ask for guidance. It's not always something that one needs to embark and do alone, because it can become very complex at the end of the day. And then just lastly, a checklist to implement the FIC Act for you, if required, has someone been assigned and appointed to ensure that we comply as an accountable institution. Have I developed an RMCP which is compliant and up to date? Has the institution identified the money laundering and terrorist financing risk based on its products, services offered, geographical location, and so forth? Does the RMCP include a risk matrix, including the business risk assessment? Does the RMCP describe the institution's risk rating process? Does the RMCP describe the institution's onboarding process of new clients? The actual customer due diligence process? Does it talk about the record keeping process? Does it describe the actual reporting process and describe the institution's employee screening process? Just a little bit of a checklist. Now, the second one, the RMCP being developed, if we put bullet points underneath there, as you've seen, we'll build a couple of more slides. Thank you so much for your time listening to me. I wish you all the best. I wish South Africa all the best when it comes to October. Let's not put our foot off the pedal and make sure that we keep the momentum going and ensuring we all comply with FIC legislation. Thank you so much.
Thank you, Cedric. As always, very insightful and definitely a whole basket of fruit to take along for us to digest. Now we will be joined by my colleague Vinette de Wet, who will showcase Lexus KYC, the solution that are used for the screening purposes with regards to your customers as well as employees. Vinette, over to you.
Thank you, Melinda, and thank you, Cedric. I'm just going to take a minute. I see that there's a poll also on the screen. I think you don't mind sharing. I'm just going to share my screen.
Vinette is sitting up. You're welcome to just complete the poll questions. It's 2 poll questions that will also give us the opportunity to assist where possible, where you've made an indication. As soon as you've completed it, it's going to disappear. Vinette, you can just share your presentation in presentation mode, and then I'll hand it over to you.
Sorry, Melinda, I'm just checking with you. Is it in presentation mode on your side?
Not currently, no.
And let's try this.
There we go. All set.
Thank you. Thank you. Thank you, Melinda, and thank you, Cedric, and welcome to everybody. My name is Vinette. I'm the National Sales Manager for the Business Software Solutions. And Cedric touched on, or during his presentation, he touched a lot on the screening of being part of the compliance. And this is where LexisNexis South Africa comes in with a solution to assist you to make this easier and, to assist you being compliant. And we at LexisNexis developed 2 specific solutions speaking to the screening, that is Lexus KYC as well as Lexus Ref Check. Both of these products are online solutions, so no installations required, no registration specifically. It is all online registrations, and you only then pay for the verifications that you do. So let's look at first at Lexus KYC. What does this solution do to assist you to be compliant? So with Lexus KYC, it is not only looking at your customers that you are dealing with or your client base, but also, and when Cedric spoke about Directive 8 and the screening of your employees, you can also use Lexus KYC for that. So Lexus KYC basically plug in with data sources, specifically looking at the identity of the person, as well as the contact information that they've given you with the FICA documents, and then specifically looking at doing the world compliance check. So often we get the questions, we need to do the PIPs and PEPs, specifically doing the screening where you need to screen if your customer is linked to the government, and then also, you know, checking the different sanctions list, adverse media, and that is all covered in the Lexus KYC solution. It's effective integration. You can integrate it with some of your other software. Like I also said, it's online. And then the fact that we also do do enhanced due diligence as well. So you can use it for a one-man band, or a small company, or a big corporate organization. These are all benefits for Lexus KYC that you can then utilize specifically to make and assist you with the compliance. And then when we look at the Lexus Ref Check, so that is one of our products so the Lexus KYC is the verification. And then when we look at Lexus Ref Check, that is specifically background checks. And this ties in with, like I said, with the Directive 8, specifically screening for the competency and the integrity of the employees. So you will see that I've highlighted it in a red block on the screen, specifically looking at ID verifications. There's your matric, as well as your academics. And then we've got the screening for the social media as well. So with this one, for Lexus KYC, you do not need a consent from your customer or from your employees to do the KYC checks. But for Lexus Ref Check, we have built in Lexus Sign, as well as an electronic consent that can be signed electronically by the employees. So that's all built into Lexus Ref Check, making your life a little bit easier. So you can just have a squiz there. This is also very handy for human resources when you employ new employees. So you can do all these verifications or the screenings there. And then specifically, so often we also get the questions, Vinette, we've got a very big customer base. Do we have to now capture them all one by one? No, we also have the option of batch processing. So let's say you've got an employee, you've got 500 employees, or you've got 1,000 customers that you would like to be screened. You can give us the information, and then we can assist you free of charge for the batch processing from our side. This is also, once you have done your screening, we will then, in Lexus KYC as well as in Ref Check, it will then generate a certificate that you can then print, keep in your file, that it's got a whole, that you've done your due diligence, and that will, when you will have an audit, you can have that in your file. So there will be another poll now. That is it from our side. So please reach out to us if you would like us to make contact with you, to give you a free demo on this, and to get you signed up and assist you with using the Lexus KYC and Ref Check. Thank you, Melinda. Back to you.
Thank you, Vinette. Short and sweet, which leaves us with a few minutes to address some of the questions that we had in the Q&A. Also a second poll coming up. If you can complete that. Cedric, I'm looking at the Q&A that were very busy. Also a few questions in the chat as well. I'm going to jump over to the ones that we've kept open. There's one specific one with regards to record keeping and vetting of our past clients. Some guidance with regards to the record keeping and vetting that is applicable on the past clients and current clients, I think would also help in this instance.
Sorry, Melinda, is the question when it comes to
Is
sorry,
record
I'm just trying to understand. Yeah.
Is
Okay.
record keeping and vetting applicable to past clients?
Yes, FIC says that you need to keep records for 5 years after last transaction. Okay, if we delve into record keeping in legislation, it becomes a little bit more in depth of what it is that they would like to see, because there is that in itself. But 5 years after last transaction, you need to keep your records. I hope that answers the question.
Thanks, Cedric. Will companies that you assisted with registration or other factors that will trigger the FIC have to be done back working? Meaning that if I assisted a company with registration in 2016, do I have to perform all the FIC requirements on them? And I think that is a general trend. Do I need to do FIC compliance on all customers? Or is there a specific guidance with regards to what type of customers do I need to screen?
You need to screen. You need to screen all your clients. Okay, even after. How can I put it to you? Legislation changed in 2017, and hopefully then everybody started screening their clients. But you also then needed to go back and screen client. You need to screen all your active clients that at least falls within that 5-year period. You need to make sure. You need to go back and screen everybody, yes.
Sorry, the screen just jumped now. What happens where the RMCP is a 365 SharePoint website?
Are we asking is it okay for it to be there? Is that yes, of course.
The
yes.
question stated was what happens where the RMCP is a 365 SharePoint website?
Yeah, that's if that's the way that you would like to share your RMCP for everybody to have access to it, that's you can use anyway. Again, not prescriptive. Only thing that it says is it must be shared with all employees within the accountable institution.
Another question. And there's a trend of some accountable institutions requesting FICA documents from other accountable institutions. Is this really necessary?
I hope I'm understanding this question correctly. As an accountable institution, you have the responsibility to know who you are doing business with, identify and verify. Sometimes where the confusion comes is somebody would say, but I'll use an example. The bank is already an accountable institution. They already did that. They already have the documents. Unfortunately, you still need to do the necessary as well. You can't rely on somebody else vetting and verifying a client. You still need to do it on the necessary on your side. Hence the fact that your risk rating might be completely different to the other accountable institutions' risk rating.
A question, can you screen customers, clients without their knowledge? I think
yes, you can.
Reminiscence again back to the when we started with the fixed screening, right?
Yes.
What is the stance?
Yes, it is required by legislation. If something is required by legislation, then yes. You need to. And clients. I can tell you now, everybody in some time in the session has been screened somewhere, probably. I'm sure everybody's got a bank account.
Absolutely. And then a follow-on to this, what do you do if you struggle to obtain all the necessary documents out of your clients and they refuse to provide the necessary documents to you with them stating Poppy Act to you? I think that ties back.
Yeah, it ties back. I understand that that's a very difficult situation, and there's a lot of people that sometimes struggle with that. So I'll try and answer this as quickly as possible. We need to unpack a little bit here. If your due diligence process, which is documented in your RMCP, requires specific information, okay, and you cannot get that information or they're not willing to share that information with you, unfortunately, the FIC says you can't actually enter into a business relationship with them. The question that you need to ask is, why aren't you willing to share the information with me? That might constitute as being suspicious. It's easy to throw the Poppy Act, okay? The person quoting the POPI Act, is that person actually understanding what POPI says? POPI doesn't override FIC. So I know the answer that people are looking for isn't the answer that I'm going to give, but I need to give you the legislative answer. If you can't get all the documents that is required, you are not allowed to enter into a business relationship with that people. And you have a reporting duty then as well.
Thank you, Cedric. Is it required to include a question, to include a residential verification of clients for compliance as a law firm?
Sorry, you broke up there a little bit, Melinda. I do apologize. You mind
Sorry,
repeating the
Cedric.
question?
No problem. Is it required to include a residential verification of clients for compliance as a law firm?
It's whatever approach. If that wants to be your approach, it can be your approach. It's your decision. Again, it's your risk. It's how you want to approach it. So if that's part of a mitigating factor for you, then yes, but not a requirement if not need be. But do the necessary. Make it. Don't try and make it as easy as possible. If you understand what I'm trying to say. That also sometimes we see people try and make it as easy as possible. I don't want to make it as difficult as possible. I understand businesses needs to run in order to be profitable and sustainable, but don't make it as easy as possible.
About trusts and company service providers.
Mm.
It seems like people are getting mixed answers. Some say individuals are included under this umbrella, and others say no. How do we get a definitive ruling on this?
The way you can get a definitive ruling, I know that's been contemplated now for a very long time. Must the individual that individual go and register as an accountable institution, or is it the actual trust, or is it the who needs to register? In order for me to give you a compliant answer, if that specific individual asked the question, don't mind giving a little bit more detail, specifically to a specific service and all of those type of things, what it is that they are doing, we can definitely get back to them and give them an answer which is 100% compliant with legislation. But we need to understand the whole process, because there might be something small that puts you in that position that you need to do the necessary, or you don't have to. One needs to be careful there.
I think, yeah, I agree with you that it requires a little bit more context and perhaps a consultation of some nature.
Yes.
I've got I think it's the last question before we need to sign off. A question from the chat. Do AML officer need to review financial statements and bank statements of a mortgagee when doing a mortgage registration? The bank already reviewed the statement prior to granting the loan, if high-risk client.
No, you don't have to. If you would like to build it in, then yes, you can. I'm talking about a legislative point of view, that from a FIC perspective. But if that's part of a risk mitigating factor for the money laundering officer to do that, to review that for a high-risk client, then yes. But again, that's part of your the processes that you want to implement in your organization.
And then a question here. We do business with large corporate entities like commercial banks, etc. Is it required to do CCD, customer due diligence on these entities?
Yes. But we need to also look at this. We need to, again, this is where the risk-based approach comes in. Listed companies. How do I approach a listed company? A listed company makes most of their information public in any case. So it might be, one can apply your mind there on how and what it is that you are going to do. But some form of, you still need to know who it is. So if you can maybe get the information publicly, so it'll just make your life a little bit easier. but the screening component is still very, very, very important. So again, it needs to be unique to your organization and who your clients are at the end of the day. I can understand asking 50 directors a copy of their ID certified. All of those things might not be the easiest exercise to do, but one applies a risk-based approach.
I think that brings us to the end of the session. Thank you so much, Cedric. As always, this is a very relevant topic, and the interaction from all the delegates and people that attended the session. Thank you so much. Vinette, thank you for bringing the product to the content as well as the other panelists, Alan and Adrian, for assisting with the Q&A as well. Have a great afternoon, everyone, and we hope to speak to everyone soon. Enjoy the rest of your day. Bye.